back with Kayla talking about the Niagara real estate market. What happened in the month of June?
Crazy increase in the Niagara region. On average, we're looking at 2020 was 468,800, and then 2021 was 655,200. That price has gone up just shy of 40%, which is wild.
Yeah, it's absolutely crazy.
Yeah, it's just not something we've seen in the past ever, an increase that high year over year.
What is up, YouTube? Matt McKeever here, and we're back with Kayla talking about the Niagara real estate market. Hey, Kayla, how's everything going?
Hey, Matt, everything's great. How are you?
Doing well, and so excited to catch up and hear what's going on in the Niagara and region real estate market. So what's new in your corner of the world?
Yeah, so we're actually, like, on a personal level finishing up a BRRRR, which is looking to be a perfect BRRRR and then some. So I'm going to break those numbers down next month once we have our appraisal in. And we're actually working on 2 other projects, just waiting for some drawings for those, a duplex conversion and then a legal in-law. So yeah, that's kind of on a personal level. And then, you know, real estate as much, you know, we're hearing the market shifting and all that stuff, but still busy as ever, buyers and sellers. So I think what I have, I kind of switched it up this month, but will be super informative for the investors. So I'm super excited to share it.
Awesome. Well, I know you've always got a great presentation, so I'll pull it up here for us. And I'm sure everyone will be looking forward to next month as well and hearing about your project, because people love seeing projects. But let's talk about what happened in the month of June.
Yeah, absolutely. So you can see at the top, Matt, you didn't see this last month because it was Rebecca, but the Realtors Association has added this note, like the June 2020 to June 2021 comparison emphasizes the negative impact Ontario's first COVID lockdown had on the province's economy, including Niagara, but also shines a light on the market's dramatic recovery and the desirability of the Niagara region as a place to call home. So I will use that as my caveat while explaining these numbers, because we were, you know, we were starting to come out of whatever that fear was. I mean, I guess of the unknown when we went into lockdown in March, but it's still somewhat reflected in these numbers, but you will see that they did, you know, it's kind of when things started to take an uptick. So, so this was for June. Number of new listings, not all that far apart from each other. So 2020, 1152. 2021, 1199. So really just not a huge difference there whatsoever. And then number of sales, so 2020, 781. This is really when things started to pick back up in the Niagara region. I know other markets were still somewhat slow at this time, but Niagara seemed to pick up a bit faster. And then 2021, 884. So honestly, almost the exact same difference between the two, a little bit heavier on the sales than on the new listings. Again, the take-home number here is going to be the price. So on average, we're looking at 2020 was 468,800, and then 2021 was 655,200. One of the standout, I mean, all of them are kind of standout, but like look at the differences between like Fonthill and Pelham, 696 to 938. Niagara on the Lake, 776 to 1,068,400. There's just massive increases across the board. West Lincoln was actually one of the smaller ones, Welland as well, but that's just because the types of houses are not as drastically different in those areas. But yeah, so crazy increase in the Niagara region. I know we saw this across the board, but definitely something to note. And then also this average days on market. So 41 in 2020, that's the only number I would say that's super reflective of the COVID market. Reason being was because the houses started to sell in June, but they had sat, in June, and they had sat for the previous month. So something to know. And then 2021, 18 days, which is not long at all. And again, this is average. The median number is a little bit more reflective, which is still sitting, it's a bit higher than it was. Like we were looking at a week previously, bit higher than that, but still, you know, still really, really great for those sellers. And then month over month. So May, you had 1246 of new listings. June, slight decrease, 1199. Same thing reflected in the number of sales. Interesting though, I mean, we're hearing the market shifting, which it is slightly, but the prices are increasing still across the board. Only slightly, but that's still a good sign for, 30 days.
Yeah.
And then one thing to note is this average days. So in May, we were looking at about 14 days. In June, we're looking at about 18. And that is the indicator that things are, changing slightly. So that is just a picture month over month. And again, everywhere saw at least a slight increase except for these guys right here. But again, that's literally $1,000. It's nothing.
Very
so
marginal,
yeah, it just doesn't really affect anything as far as prices go. So that's month over month. And then I always show it this way just because I think there's some people that like to see data displayed differently. So this is the year over year at the top. So number of sales. So we are up from June 2020 to June 2021 by 13.1%. That price has gone up just shy of 40%, which is wild.
Yeah, it's absolutely crazy.
Yeah, it's just not something we've seen in the past ever, an increase that high year over year. Days on market, again, this is just reflective of the COVID situation. So it's, it has taken a massive downturn, which is good for sellers. And then the number of new listings, slight increase, 4.1%. Again, that's just a sign of what's going on. And then this is the month over month. So number of sales was down 6.1%. And this also speaks to like the seasonality of real estate. Like summer, people start to go away, kids are ending school. I mean, this year was a little bit different, but so we will see a slight lull. I mean, there will still certainly be people in the market, but come fall, we'll see things pick right back up. It's just people are away in the summer and they do take time to themselves. And then 1.1 increase month over month, which is still great. If we carry on this trajectory, it'll be a 12% increase year over year, which is quite good, especially when we're seeing this type of increase the previous year.
Yeah.
And then average days on market, which we talked about. So quite a drastic increase here, but still pretty good in comparison to where we were in June 2020. And then number of new listings are down 3.8%. So, I mean, not a huge decrease here. We're working with about a month of inventory right now. Any questions about those, Matt, before I move on to some other stats that I pulled?
Yeah, no, appreciate you breaking it down. And as you mentioned, like the fact that we're still dealing with kind of 1 month's inventory, even though the market, we're seeing it maybe trend up on days on market, it still, traditionally puts us very much in a seller's market when we're still at like 1 or 2 months worth of inventory.
Yeah, absolutely. Like we won't see a shift from sellers to buyers until we're in like the 3-4 month. So we're still very much, like you said, in a seller's market, but I think the next two graphs will give kind of hope to buyers and sellers because I think everyone's kind of like, what the heck is going on?
Yeah.
So this one here is the months of supply. So in May and June, we are at about a month. You can see, so this was when things were especially crazy.
Yeah.
This, when we were way 2 weeks of inventory, January, February. So do you remember in 2017, I'm sure everyone does, when everyone was like, oh, this is the craziest the market's ever going to be. So this was 2017. This is where we were January, February. So you can see that we actually were in, I don't know if you want to call it a worse or better situation. It depends if you're a buyer or a seller. So still very much in a seller's market. Do we need to shift our approach when listing houses? Of course, because we're not in this situation anymore. However, like sellers are starting to get a little bit wary. There's still, I mean, this is good news for sellers. And you can see just the drastic difference. Like COVID was not a thing at this time.
Yeah.
Just the drastic difference that's taken place and how, again, like real estate's kind of goes in cycles. We were down, we were up, we were down, we were up. So it's just a good indicator of that. And it does really display that, despite what is happening, if you read the headlines, it's, the housing market. This is a better indicator. And this is just for the Niagara region, of course, but I think it is somewhat reflective of other markets as well. Yeah. And then this is homes for sale. So this is the good news for the buyers. So you can see, again, January, February, which same, it kind of, you know, replicates the months of inventory. But you can see we are increasing. So there are more options for buyers out there. Me, myself, like we've gotten quite a few houses under 500,000 lately. Investors have been doing quite well lately as well. The only thing that I'm like, when I'm working with investors and they're analyzing their numbers, I'm finding that they still want to use January, February numbers as their comparables for their ARV.
Yeah.
Like, buyer beware of that, because that's just not the situation anymore. Your appraiser's not going to pull that far. So it's very important to make sure you're using these numbers and not these dreamy numbers that were happening here, because it's just, you'll end up, you know, a little bit disappointed when that appraisal comes through. But still great opportunity now because you're buying lower. So if you're a little bit lower, I should say, there's more housing out there for you. So you have more options. So yeah, just something to keep in mind. Make sure when you're working with your real estate agent or, you know, you're analyzing your numbers, just pull recent comps. The prices they've actually increased. We've seen that, but just make sure in your area, you're pulling the accurate data when you're making those decisions.
Yeah, really appreciate you just reminding people that, you know, this situation or the context is very important here. Yeah,
and like I said, like I'm looking at the comparables for my property, and boy, oh boy, would I love to use what was happening here. But again, it still looks very, very good. There's honestly, like there's no wrong answer here. It's just, of course, make sure you're using the appropriate data for what you're trying to do. And then from that, so this is like, I kind of switched it up this time. Usually I show deals. I'm going to show rents instead, because this is the, like, one of the number one questions I get is like, what are the rents like in Niagara? Because no one, if you're not from here, you're not familiar. And I think people will find it fairly favorable. So there are a ton of properties on here. I'm not going to go through all of them. I tried to pull from each city that would be considered in like the Niagara region. So just to start, 2-bed, 1-bath condo in Beamsville, 1,800. Not bad. 1,000 square feet, so decent size. And then again, sorry for all the scrolling I'm about to do, but I just want to show everyone. Another thing, our freehold or condo townhouse is still, you know, a good buy if you're renting the entire house versus, you know, 2 units.
Right.
This is actually on the lower end, which we'll see, but this is, you know, a newer built townhouse. They're charging $24.83 plus utilities, so not bad. And then if I move into Crystal Beach, so very favorable. It's renovated. It's close to the, you know, it's close to the lake, but it's a big 1-bed. So 1,029 square feet, 1-bed in Crystal Beach. The back unit, 1,500. So pretty good. And then another one. So this is, again, one of those new built. This is, I guess, a semi, 2,400. Crystal Beach, a little further out. Font Hill, 2,500. And these, again, full townhouses. I kind of tried to pick different ones. These condos I get a ton of questions about. Are these worth it at the price that they're at? So you're going to see a pretty drastic range here, but for 570 square feet, 1,700.
And so do you mind just giving perspective for an outsider looking in? What's unique about those condos, or why would someone be willing to pay such a rental premium compared to maybe some of the other properties that you were showing?
Yeah, absolutely. So these are right at the lake. Like, you are beside the highway, you're right beside the lake. They've created basically a whole community down there. There's a bunch of restaurants, stores, shops, etc. And they're continuously building, but literally the highway is right beside you as well. So it's a pretty optimal spot if, you know, if you're comparing, maybe you're going to work in Toronto, but you don't want to pay Toronto condo prices, although these really aren't that far off. This is obviously an option. The GO train will not be far from here. So if these are long-term renters, that's also an option. So that's that. And then that goes all the way up to like 2,700 in these condos. I won't go through all of them because I'm going to go into the next city. These are townhouses. 2,500. North Service Road again, like 2-bed, 2-bath, 2,500. Like, those are pretty optimal rents for a condo, especially if you get them pre-built for those costs. And let me just get into, so this is Niagara Falls. So this is a 2-bed, 1-bath, which will kind of give you, I guess, the contrast between Grimsby and Niagara Falls. So this is rented for $1,750. However, there are others in here, $1,850, and this is a 1-bed versus the 2-bed, but about the same size.
Yeah.
And then this is the whole house. This is a 3-bed, 1-bath house for $1,900. But then this is the upper unit of a bungalow for $1,900.
Yeah.
And it's partially renovated. It has like washer dryer available immediately. You can see it sat a little bit longer, these 35 days, but I mean, for $1,900, I'd probably wait.
Yeah.
And then again, this is a difference between that 2-bed. So $1,950 versus the $1,750. And then I'm just gonna go into St. Catharines here, just because I know that's kind of the. Oh, this is a bachelor. This square footage is off. So studio basement apartment, $1,000 all inclusive. It is, it is Niagara on the Lake, so a bit of a premium location.
Yeah.
Or Colborne, lower unit. It's basically it's a side split, so you would have the 2 lower floors, $1,500, and then the upper unit for $2,000. They do have 2 bathrooms, 3 beds. They're nice, but I just wanted to show like these premium rents are kind of across the board. Yeah,
it's interesting to see. And I guess, just chatting out loud without necessarily getting into deep details on these, how would this kind of compare to maybe a year or maybe 2 years ago, pre-COVID? Are you seeing a lot of pressure on rent prices?
Yeah, so I mean, I think that rental obviously could not have increased at the same rate that housing has. But the thing is when people are buying houses at a premium, which I mean, Niagara compared to a lot of other markets, not so, but for Niagara, it is. The rental prices are increasing as well. But I've actually done a few rentals for my investor clients recently and rented them out. And if you're providing like a nice renovated or partially renovated space, or even just clean and painted, there's a lot of interest in these places because there are quite a few apartments that just aren't quite nice, or they're in bad neighborhoods or whatever it is. So as long as you're strategic about where you buy and what you do to it to make it appealing to renters, you can get these premium rents. As far as comparable to what we were looking at 2 years ago, there has been an increase. The one thing I think that skews it a bit is that there's still landlords here that bought for, pennies, like 4 or 5 years ago. So they're kind of skewing the prices because they're able to rent at a much lower rate and still cash flow. So you will see some lower rents, but I just wanted to, and I kind of took across the board.
Yeah.
I just wanted to really show that, like, if you're giving a nice unit, you can really, you can generate a pretty decent rent. This is a big house, 2,100. So this is another one where maybe we would have seen them purchase a while back, but it's a front unit. It's just 4 beds. Okay, St. Catharines. So this is a 1-bed. Again, this is the square footage of the house, not the actual apartment, just for, just for reference. But so they're paying 1/3 of all the utility bills. It's a 1-bed, 1-bath for $1,100. Pretty nice area. This is a condo, 1 bed, 707 square feet. This one actually has the correct square footage, $1,450. This one was actually one of my clients. So this is a 2-bed, 1-bath. It's 760 square feet. It's an upper unit, $1,500. Lower, $316. And I just want to get into 2-bed, 1-bath, $18. And they're paying utilities there. So you can, I just wanted to show everyone, this is an upper unit, $2,000. So a bit of a range, but if you're providing a nice space, you can definitely get some great tenants. And some great rents as well. So I know cash flow is becoming, I don't want to say a bit of an issue, but if you're not doing a strategic buy, it can be tough to cash flow. But as long as you're buying, again, at the right price and charging these rents and doing, the strategic rentals to make it appealing, you can still definitely cash flow, even though the prices have increased to where they have. So,
and I imagine with, prices increasing the way they have, and now reviewing these rent prices that you've been showing us, I imagine we're going to see more and more investors in the Niagara region moving to that business model of wanting to add the accessory dwelling or the basement suite, similar to what, we've seen for the last decade or so in the Hamilton area, where that was a really popular strategy. I imagine you're going to see more and more of that in your backyard.
Yeah, I would say we're there. I mean, most investors that I talk to are looking to do that, or to buy like a purpose-built duplex, triplex, etc. Just because obviously there's more of an advantage in a cash flow perspective to getting those 2 units. However, I do have more. I don't want to call them hands off, because they're still, they're still putting in the work, but the people that are willing to take a little bit less cash flow, because there are single family opportunities that still do cash flow here, as much as they are becoming a little bit harder to get there. I've done a few lately. So it's just depending on what you're looking to do, there's still options. It's just making sure that that you're running the numbers and not making emotional decisions, obviously, just basing it solely off the numbers. So yeah, so that's just, I wanted to share that, because again, I do get a lot of questions, and I do share these numbers with with the investors when they're kind of deciding. And this is only on Realtor. Not every landlord rents on Realtor, but again, this is where I can provide you with the most concrete proof, because the close price is right there. So just wanted to share that. Any questions, Matt? I know we kind of did chat about it, but
yeah, no, I appreciate the breakdown. I think the audience is absolutely going to love it, because from an outsider looking in, it can be sometimes hard to know, hey, I saw this place was for rent at this price, but what actually happened? Did they ever rent it out? Did they rent it out at the price they wanted? How long did it take to rent out? So really appreciate you walking us through that.
Yeah, absolutely. And the other thing is, those are all within the last 60 days. So recent data, I just wanted to make sure that it was current with what's going on right now, because obviously with COVID, there's a bit of an idea that people aren't renting or not able to because of the job market, but it seems to not be an issue as far as I can tell with what I've posted recently and those types of rents. So that would be that. And then I always do like a little news segment. I thought this was super cool, so I'm gonna pull up the article. So this is actually,
I don't think I heard about this.
So this is one of my favorite websites for like business related news for Niagara. So Port Colborne is going to become a port for several Great Lakes cruise lines.
Interesting.
Yeah, so for people, and I mean, with these cruise lines, you can exit and enter where you want, at what city you want. And I know there's been a big influx of interest in the Airbnb market, so this might be an opportunity for that. But also for the commercial market, for investors that, they invest in storefronts or restaurants or whatever it is. This is a huge opportunity if you have X amount of people who are coming off for a day or two to explore Port Colborne regularly. So I know cruises still have a bit of a stigma because of what happened, but eventually we will be back to normal as far as that goes. And yeah, so they're going to use Port Colborne as a docking location to visit the Niagara region, which is super neat. Not something we've seen before. And it will just bring a lot of attention to Port Colborne that I don't like. Port Colborne's popular, but it just doesn't get the type of attention that, other cities in the Niagara region do. And we're thinking, they're saying beginning of May 2022. That's not that far away.
Yeah, that's not far at all. And so I'm actually completely naive to this. So I'm just going to ask a couple of quick questions.
Yeah, for sure.
Are these cruise lines already a thing and now they've just added Port Colborne, or is this like a whole new business that's being launched?
Yeah, so they are existing currently.
Gotcha.
I would argue that perhaps not to this level here.
I was gonna say that doesn't feel like that's on the Great Lakes, but
yeah.
Do you know roughly like how many people do they expect this will like impact Port Colborne, or were they able to share any info?
Yeah, so they haven't disclosed those details yet. I will be keeping an eye on this because I do think it's super interesting. But they are, and again, they are working to develop the waterfront and the Welland Canal in an effort to, so tourists will come back. So yeah, it's just the Great Lakes are looking forward to an economic boom the industry could provide. So it's like, if, when this works out, it's going to be a huge deal for Port Colborne. And if they're, if people are here for a few days, if the cruise ships board or dock for, days, people will have more options to explore the Niagara region. So just thought this was super neat. I will there is a more accurate photo of the cruise ship that they're currently using. I think this is kind of more of a what could be.
Yeah.
Unless I'm completely naive to it as well. But from the research that I did, I couldn't find this specific guy. This one looks like one that goes in the ocean. But nonetheless, still a huge deal for the area as a whole. And it will also bring, like, people that are going to stop and they're going to travel to the wineries, to the restaurants, to, it won't keep people just in Port Colborne. It will have them exploring the whole Niagara region and putting an eye, I mean, the Great Lakes are huge, so people are going to be coming from all over, putting in, a focus on these cities that hasn't been done before. So I think that this is a really, really neat story. They're naming it a success story. I would agree. So yeah, just wanted to share that. Last but not least, my monthly.
Nice.
Because everyone comments on this. I always kind of bring it up. Niagara Navigator, guys, the people who have seen it might get annoyed of it. For the people that haven't, you'll love it. You can.
It's funny though. Like I love sharing these resources because there's different viewers every episode. But in addition, like the funny thing is, on a previous video that I did, I was chatting about Brantford, and I liked one of the things they did on their website. And Canada's such a small world that it turned out like one of the Brantford council members saw it and shared it with the economic team. And it's just funny what a small world it is. So I love supporting and calling out municipalities when they're doing something right. So I really feel like Niagara Region's helping out investors and property owners with these resources.
Yeah, and again, like we said, like I've never seen it, and I've had talking to investors, they're just saying like, oh, I wish my city had that. And I was like, yeah, like I, having grown up in Hamilton, didn't know that this was a thing. But just again, to give a little bit of an overview about it, you can look up schools, you can look up, cemeteries if you don't want to live near one, historic sites, places of worship, community services. You can explore this thing for hours. I've done it. Government offices, and then you can also look at any projects that the government has planned on their budget lines. They'll pop up as well. And if you go in closer, it'll pull up property lines. Again, obviously, if you want an exact property line, get a survey. But nonetheless, if you're looking for an idea, this is the program that you want to look at. So as usual, I just wanted to share that for any new viewers, because the feedback from the people I've talked to that have seen it find it super interesting, have been using it as a resource. So yeah, just our little monthly feature with the Niagara Navigator.
Awesome. Yeah, appreciate it, Kayla. And just appreciate you breaking down everything going on for the month of June in regards to Niagara and region, because again, I think we're going to see more and more investors on their eye towards your corner of Ontario, just because I'm so bullish on domestic tourism, things like the Port Colborne thing. I think we're going to continue to hear more and more of those sort of opportunities coming to the Niagara region, and a lot of other domestic tourism destinations across Ontario. So
yeah, really I would agree.
Up to date.
I've been talking to the cities like endlessly about the Airbnb, because they're coming out with so many new rules, et cetera, et cetera. And I was on the phone with the city of Niagara Falls, and they are saying as of January 2022, again, this is just over the phone, whether or not this will actually play out, but any zoning GC, NC, or TC, so those will be where they allow Airbnbs legally. There will be a license involved, but for anyone that's looking, that might be where you want to focus your efforts, in the areas that are zoned those things. Whether or not they'll rezone as these new rules come in, that's obviously unknown at the moment, but I did want to share that just because that's been a question as well. Yeah,
appreciate you sharing that, and definitely keep us updated as that develops, because again, there's a lot of opportunities with short-term rentals.
Yeah, absolutely. But yeah, Matt, I think that's pretty much it. If you have any questions, let me know.
Yeah, appreciate it, Kayla. We'll have a link to all of Kayla's contact information in the video description down below. Really encourage you guys to reach out and chat with her if you're thinking about investing in the Niagara region, or maybe just buying your forever home in that area as well. I imagine there's lots of people in the GTA that maybe have one eye on relocating now that they've tested out remote work and things of that nature. But again, just really appreciate Kayla. Really looking forward to next month getting to dive into one of your own projects. I know people love that. And again, this is just a perfect example of the importance of having a power team member like Kayla as your realtor, because you want someone that's in the trenches, that's doing the work, that's on top of the data the way she is in regards to what's going on with rents, what's going on with short-term rentals, what's going on in the community. Because I think there's still a lot of opportunities with real estate investing, but as we get into these competitive markets, you know, it's more and more important than ever before that you're doing your due diligence, you're running your numbers, and you're not getting emotional as an investor. And I think, you know, if buying in the Niagara region, you want someone like Kayla in your corner. So appreciate it, Kayla.
Yeah, absolutely. Thanks, Matt. Have a great day.
You too.